Joining me right now to get ahead of it is former Kansas City Federal Reserve President Thomas Hoenig. So where are we now after all of these rate hikes? We're looking at well, when you look at next week, 9 or 10 rate hikes over the last year. We've gone all the way up in a hurry. What has that done to the macro story in your view?
Well, as expected. I mean, you have a situation where you've raised rates that much and as quickly as you have. The economy is slowing. We saw that in the GDP number in part, but also within the GDP number, slow down investment, business investment. Certainly, the commercial real estate and real estate industry is under deep stress right now, and so that's the slowing of the economy that you planned for and that you expected. Now, it's carried over into the banking industry, and we're seeing that as well. And I think there's some real vulnerabilities in the unrealized losses, but also on the assets more generally. So the economy is continuing to slow. We are seeing inflation coming down, but not as much as people had thought. And that's partly because even with all these rate increases, real interest rates, the real Fed funds rate is about zero. And you have that yet to contend with, and the consumer is still spending. So there's going to be more tightening, I think, next week for sure, and maybe beyond that. So we're still in the process. And I would say one last thing, Maria. It takes time. Before the Great Recession, that occurred in 2008, interest rates peaked in the summer of 2006. It took a year for it to really show slowing, and almost 2 years before we had the real deep recession that took force. So we're still in the process of slowing this economy, and I think a recession still does lie ahead of us.
How serious a recession are you expecting?
Well, I do expect a fairly significant, nothing like 2008 perhaps, but still a significant slowdown. We will see, I think, a rise in unemployment as businesses continue to contract as we go forward through this year, especially if they continue to raise interest rates and real rates rise. So I do see a recession. Also, just as a sidebar, we need to get the debt ceiling issue resolved, and we need to get government spending under control. So those are big issues that not having them resolved creates uncertainty, and I think makes it harder for the economy to recover, and makes the risk of a recession even more, I think, difficult.
And then to make matters worse, the banking crisis, you were also the vice chairman of the FDIC, and now we're all focused on First Republic Bank fighting for survival. There are reports that the government is coordinating urgent talks to rescue the bank, negotiate the sale of assets. Where are we on this banking crisis, sir? What do you think is happening in terms of further fallout?
Well, I think Silicon Valley was the canary in the coal mine. I think that you have enormous downward pressure on asset values in the banking industry. First Republic is part of that initial, shall we say, problem, and they are trying to. I assume they're trying. I read about it. They're trying to sell it, but that's going to be difficult because you have such a deep capital hole. And I think if I were a banking looking for this, I'd say, wait a minute, let's wait till the FDIC takes it over and we can get a better deal. And I think that's part of what's slowing down any negotiations with First Republic. We'll see how that turns out. I'm sure we'll get it resolved without a major crisis, but still, you've got pressure there as well, and it's going to show through the banking industry, I'm afraid.
Thomas Hoenig, it's always a pleasure. We so appreciate your time.